Good day, fellow investors. We have been now 8 years on YouTube and 7 years with my research platform. I thank you all for more than 250,000 subscribers, but it is time to do a good review of what we have done in the last 7 years. The performance, I think it was good. It can be better, but we'll discuss the mistakes. We'll discuss who I am, the YouTube situation, entertainment versus value, chasing investments, the research compounding, the psychology, my future goals, and the gift to you. Let's go immediately to the performance. This is my model portfolio that has been in sequence for the last 7 years on my research platform. It was started a little bit different, but this is the strategy there. 5,250 monthly contributions, 7 years, estimated interest rate 13.85, and this is then the result in line with the portfolio results. I think I did okay. My goal when I launched my research platform was 10 to 15% per year. I have discussed in this video how we did the returns, how we did beat the market, and the difference is the lower P ratio is 12 compared to 25-30. And that is how we'll also continue to do it in the future. I wished I did better, but we did compound also doing mistakes. I'll be doing more mistakes in the future, but I hope that I do less. And therefore, let's also discuss the good, the bad, and also the ugly. But first, who is Sven Karlin? I've started investing in 2002 in Croatia, which is where I live, and then did really well in the first 4 or 5 years of my personal investing. Of course, I started investing here and I accumulated, and then there was this frontier market boom, Norwegian funds buying everything, and I already exited here and I had the 5x of my portfolio. I was rich, bought a boat and things like that. One of the companies I bought is not Tesla, but Ericsson, Nikola Tesla, and I remember first buying it at a 30% dividend or something like that. Of course, it was a 10x in the next few years, and now I see it's even lower. I sold it in 2005, 2006. Then I think I lost about 20% of a very small portfolio in 2008. I was still playing around learning, but then 2009 came and I started investing badly enough. I did again 4x on my portfolio. And this is what I invested it mostly. This is a tourist complex in Croatia. And I was buying here like crazy. The dividend was 8%, the growth was 8%. And then when you find something like that, sooner rather than later, you get yourself a 4x. Then 2013-14, I moved to London, worked for Bloomberg. London was too crazy for me, moved to the Netherlands, and there I was professor of finance and accounting at the Amsterdam Business School. At that point in time, I also started writing for Seeking Alpha, also did some analysis there, but I also launched YouTube. These are the crazy videos that I did at the start. And here I really want to discuss something. As a content creator, as a starting content creator, 2015 analysis, there is a huge difference between entertaining and real investing value. As you write your articles, you always go for more clicks. The more clicks, the more you get paid, of course, which is, I think, a big mistake and something you, as a consumer of investment content online, have to understand, because the incentive behind it is wrong. And that is what I also did. If you look at my analysis on Seeking Alpha in 2019, so it was all over the place. I was looking for these hot investments. This was a big mistake. We made money on Russia because I was following the risks, but just going there was a big mistake. And I was looking at these Argentina investments, things like that, because that was in demand, and that was in demand by the machine of the internet, that people look for those crazy gains. And I played that game and that was perhaps the biggest mistake I've made in the last 7 years. Also here, if you look at 2015, I was looking practically at all things there. Then I made this huge decision 2.5 years ago where I sold everything except the model portfolio on my research platform. I took some time off to think, restructure everything, and I also made this video so you can see here how I sold everything September 2022, and I needed to shift from that entertainment to real value investing focus. In that period, I lost 50% of my research platform members because people don't like changes, and I knew it would be a painful situation for me also financially, but I needed to do because now I think also what I do is 3 times better than what it was. I moved away from the entertaining and we went to watch paint dry investing. Performance, everything has improved since. And now everything that's done is this Sven Carlin research platform 2.0 with the covered stocks, with the free portfolio that are now carefully connected, analyzed, diversified portfolio where the goal is 20 positions. For those that need more diversification, my portfolio with practically 1 position, maybe 2 if you count an older one, and maybe 3 next week. And that's it. And then the model portfolio with now about 10 positions managed globally. And then we have all these situations, thinking, but everything clearly based on the risk and reward. Everything is updated this week, so you can feel free to check it and see if this value investing, covered stock process, portfolio building might fit your financial goals over the long term. And if you look in the past, I did really a lot of research, but much more focused in the last few years than before, because before I was simply looking at everything. We looked at stocks, stock by stock. I thought that the more I do research, the more my customers will be happier. And since I learned that it's not about quantity, it is about quality, it is about knowing those few situations rather than knowing a little bit than about everything. However, doing this crazy research in the last 7 years helps also now in knowing better about a few little things, because I looked at everything. Chinese fintech, sugar, uranium, natural gas, core point logic, REITs. You see here so much research that this is insane, but I can tell you one thing. We did good, of course. The more research you do, the more mistakes you will also find, but now everything is structured, smoothened in a polished product. I think that now I can say after 7 years. What I have learned is that one must never chase investments. I've looked at Argentina, I've looked at Chinese fintech stocks, at Chile, at Russia, at Europe, at everywhere. But then I thought that I just needed to do a lot of research and constantly give out ideas. Those ideas, some were good, some were bad, but they led to good returns in the model portfolio. Okay, nothing wrong with that. However, just the diversification and everything, the spreading around was too much to handle. The bad situations were more often. There will be bad situations in the future, I know that. But now I'm, let's say, much more experienced also to handle that. Because now I have 23 years of investing experience and 10 years of deep research experience attached to that psychological component. Okay, am I watching paint dry? Or am I having fun with my investments? Fresh Del Monte produced, we made money I think once or twice, but I know about the car industry. I've been looking at for the last 10 years at it. Paper industries, there was still Whole Foods on the market back then, Amazon, so things like that. Then another great component of YouTube is the investor psychology. Because when I look at the comments on this market, stock market decline on fundamentals, not on tariffs, everyone is commenting how valuations might stay higher for good, and this is what is then driving investments. New technologies pushed up premiums, new innovation, everything could go on and on. And then I get the feeling, okay, to me that's irrational, because if valuations go down to a mean average, everyone loses. That's a risk I don't want to take. As a value investor, as I have discussed, a P ratio of 12 is better than a P ratio of 30 for the same earnings, better earnings and the same growth. When it comes to investing, it is about understanding the risk and reward of things and then implementing that into a portfolio. We bought Glencore here, we sold here, and now I'm back to analyzing this. And this is also my gift to you. I'll put the link directly in the description below. I have put the Glencore analysis that I made just now here on free preview on my research platform. Going forward, I need to keep my patience when it comes to the investments, to the analysis, to the going into things for whatever reason. I have structured that into the portfolios, covered stocks. I can look at stocks if they're interesting. I make videos, so that is, let's say, satisfying the entertainment part. Then if something is interesting, I want to learn more, I have the diversified portfolio. I think we'll get to 25 positions where I want to own, to learn more about, to know the stock better. Then if it fits the knowledge and the requirements, then I can bunk it up, and the price, of course, versus value, to the model portfolio. And then when I'm absolutely certain, it goes into my personal opportunistic portfolio. Fortunately, the knowledge compounds. We first focus on risk. We try to manage that. So that's also a long-term process. The free portfolios we own to know. There will be a lot of mistakes, of course, like entering too early, managing the position, unknowns, things like that, taking too much risk than what one really should. But even with mistakes, the investment environment is made, especially value investing, that if you make a mistake with a margin of safety, the mistake isn't that costly. But if you do a good return, a good investment, then the upside covers also for the mistakes. Thanks for watching. Subscribe, enjoy the YouTube educational entertaining videos. For the more nitty-gritty process of research and investment, check my research platform.